The Reserve Bank is confident the Omicron variant of COVID won't derail the economy. That's our main story this morning. Also today, more evidence of a cooling in the home market, why a mega merger might not be good for the ASX, and how a small drug company doubled its share price yesterday. It's Wednesday, the 8th of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Gareth Aird from the Commonwealth Bank about yesterday's Reserve Bank board meeting. And on that topic, Sean, the Reserve Bank is worried about the Omicron variant of COVID-19, but somewhat reassuringly, doesn't think it's going to derail the economy.
That's right, Michael. The RBA board met yesterday, its final gathering until February next year. It left the official cash rate on hold at 0.8%, as expected, but it did slightly change its wording around the outlook for interest rates, dropping a comment that it didn't expect underlying inflation to be higher than 2.5% until at least the end of 2023. It's relevant because only at that point will the central bank consider lifting the official cash rate, which of course will feed through to all our home loans. By dropping the reference to the end of 2023, the RBA has given itself just a little bit more flexibility. The bank is upbeat about the economic recovery, confident that high vaccination rates and low interest rates will support the pickup. Households are spending more, businesses are investing more, and the economy is expected to be back to its pre-Delta path by the middle of next year. The Reserve Bank said inflation pressures are less in Australia than other economies, in large part because wage pressures are less. Mind you, the run of industrial activity in recent days suggests that wage pressure might just pick up soon. Bottom line in all this, Michael, is that the official cash rate is still on hold, but market interest rates are creeping higher.
And at the same time, Sean, you've got the International Monetary Fund calling for the federal government to push tax reform, arguing that it will help the economy to grow faster and more equitably.
Yes, the IMF is pushing for a lower corporate tax rate, a reduction in tax breaks for the property market, and an increase, or broadening at least, in the GST. The IMF also says state governments should switch away from stamp duties towards annual land tax based on value. Certainly, they're all good ideas, but politically very, very difficult in this country. It was a very busy day for the economists yesterday, Michael.
Yeah, sure was. So how did markets perform yesterday?
Well, the S&P ASX 200 finished up 1% to 7,314 points after a very strong night on Wall Street on Tuesday night. 10 of the 11 sub-indices rose, the odd one out being utilities. Energy stocks led the way, followed by tech and healthcare groups. Around 3/4 of the stocks on the top 200 ended higher. Now, Zipco's share price, I better mention this one, it jumped by nearly 10% and was almost the best performer yesterday. Of course, it came after its 10% fall on Monday. Zipco yesterday reported that monthly transaction volumes climbed 52% during November versus a year earlier. Customer numbers jumped 71% to more than 9 million. Now, Chief Executive Larry Diamond was upbeat about the results, saying the group is processing annualised payments of $10 billion, and it's one of the largest geographical footprints of any buy now, pay later group. Travel stocks were really interesting yesterday as well. They had a very strong day following reduced fears about the effect of the Omicron variant on the global economy. Corporate travel management and Flight Centre both rose 5.7%. Webjet was up 4.5%, and Qantas jumped nearly 4%. And Michael, I have an admission, something which, to be honest, I missed in recent trading sessions. It's the slide down the top 10 by Westpac. Until a couple of weeks ago, Westpac was the fourth largest company behind Commonwealth Bank, CSL and BHP. It's now number 7. Its underperformance recently means National Australia Bank, ANZ and Macquarie Group are all now bigger than Westpac.
All right. Now, what's happened in overseas markets overnight, Sean?
Global equities moved higher after fears about the Omicron variant abated and signs emerged that Beijing would start stimulating the world's second largest economy. Now, Michael, on Wall Street, the tech-heavy Nasdaq was up by 3% in early afternoon trading. Not a bad day. The broader S&P 500 was 2% higher. It wasn't just Wall Street. The Stoxx Europe 600 index ended the day up 2.5%. The Aussie dollar continues its slow climb higher, and it's now trading above 71 US cents. Oil prices were up sharply overnight, while gold prices were also higher.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning, and if we wanted confirmation that the housing boom might be coming off the boil, it looks like we have it.
Home buying intentions fell 27.5% last month and are 18% lower than a year ago. That's according to a report from the Commonwealth Bank, which of course is the biggest home lender in the country. Now, that figure is from a very high starting point. We must keep that in mind. But basically, higher interest rates, tighter credit, and worsening affordability is hurting the market. It's happening across the country. And according to the research, the slowdown is across investors as well as owner-occupiers. Mind you, the market has been on a bit of a run. The Bureau of Statistics yesterday said the total value of the 10.7 million residences across the country is now $9.3 trillion, with a T, trillion dollars. That's up $1 trillion over the last 6 months and obviously is the highest ever. The average price of a house is now $863,700. New South Wales accounts for 40% of the value, that's about $3.7 trillion, and the average price of a residence in that state is now $1.1 million. According to the Bureau of Statistics, the strongest house price growth over the past year has occurred in Hobart, number 1, Melbourne, number 2, and Canberra, number 3.
It has been a truly remarkable year for property, hasn't it?
It sure has. I don't think we're going to see this again for quite a while.
Yeah, I can't imagine we will. Now, Sean, Oil Search shareholders have voted for the merger deal with Santos. The ASX is about to get a very large oil and gas company.
It is. While some institutional investors aren't happy with the deal, enough are for the vote to pass. The merger of Santos and Oil Search will create a $21 billion company, which should be enough to sneak it into the top 20 companies on the bourse. It's about the same size as market leader Woodside, though that company is going through the process of merging with BHP's oil and gas assets, which will make it much bigger. It means Australia will have a fairly dirty, so to speak, list of top 20 companies. BHP, Fortescue, Rio Tinto, the new Santos, and the new Woodside are all very big carbon emitters. If you throw in James Hardie and Transurban, which are both big users of cement, that is a massive emitter, cement, and throw in Sydney Airport as well, though that will potentially delist next year, you're getting a very heavy concentration of carbon-heavy companies. Does it matter? Well, it does. The United Kingdom market, for example, until recently had underperformed global markets, and one of the reasons was the large number of energy companies on the exchange. Investors, we know, are looking for greener companies. Australia's bourse suddenly will become very dirty, and that might not be a good thing.
Okay. Now, what's the latest COVID news, Sean?
New South Wales now has at least 31 cases of the Omicron variant. No one with the new strain has yet been hospitalised. That's fortunate. The state recorded 260 COVID cases yesterday and 2 deaths. Victoria recorded 1,185 new cases and 7 deaths, and the ACT reported 3 new cases, and there was 1 case in Queensland. That state's Premier, Anastasia Palaszczuk, said she hoped that state borders wouldn't need to close again, pretty much reflecting what the rest of us think, though it's taken Ms. Palaszczuk a while to get there. Across the country, the vaccination rate for adults over the age of 16 is now 88%, with the ACT over 95%, New South Wales at 93%, and Victoria at 91%.
Now, Sean, I mentioned this one at the top of the show. This is pretty exciting news, this one. There's a small Australian drug company that's had some great results for the treatment of neurological disorders in early childhood.
Yes, easily my favourite story of the day, and I'm already having dibs on this for the Saturday show, my favourite story of the week.
All right, that's fair.
Neuron Pharmaceuticals has had a drug in phase 3 trials in the United States for the treatment of Rett syndrome, R-E-T-T. Rett syndrome afflicts kids from about the age of 6 months, and they gradually lose coordination, speech, and use of their hands. Symptoms can stabilise as they get older, but there's no cure. Now, Neuron's phase 3 trials have shown statistically significant benefits for the 187 patients, which means the drug will now go to the US regulator, the Food and Drug Administration. Neuron has partnered with US company Arcadia to develop the treatment, and Arcadia said patients recorded improvements in core symptoms like being able to respond to a choice or experiencing more freedom in their hand movements. That's a serious improvement in the quality of life. Neuron's share price doubled yesterday on the news after it said it could now be eligible for milestone payments and royalties going forward. When a drug passes phase 3 trials, it's very, very close to being accepted by the FDA. It's great news, just a good story. Share price jump is fantastic for shareholders, but really it's all about all those poor kids out there with Rett syndrome. There's some hope.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that Treasurer Josh Frydenberg will legislate a new power that could force Apple to join the banks in investing in the nation's $650 million a day payment system. Basically, it looks like the Treasurer is overhauling the rules to capture players like buy now, pay later groups and big tech companies. An announcement is expected later today, and we'll have more of that in the afternoon report.
Running through some of the other stories around today, great news if you're looking to book a summer holiday. The competition watchdog says domestic airfares are at their lowest level since 2016. Airlines are competing to get passengers in the air this summer with 3 carriers, that's Qantas, Virgin and Rex, now competing in the Melbourne, Sydney, Brisbane corridor. There's also a chance that a 4th airline, Bonza, could join as well next year.
Let's hope so. Magellan Financial Group's share price keeps falling, down another 6% yesterday, and has almost halved since its peak in July. Yesterday's fall came after CEO Brett Cairns unexpectedly announced he'd retire. Magellan, of course, was founded by Executive Chair Hamish Douglass. Mr. Douglass is somewhat of a rock star in the local funds management sector, though the recent underperformance of his funds have certainly dimmed his brightness.
Alinta Energy, Sean, has unveiled a proposal for a huge wind farm off the coast of Victoria, which would power the Portland aluminium smelter. The project would cost $4 billion, create jobs, and generate 1,000 megawatts of power. If it went ahead, it would be the first renewable energy power smelter in the country.
Bank of Queensland has warned that it expects lower net interest margins due to price competition, changes in the bond yield curve, and a greater proportion of fixed rate lending. But investors aren't deterred. In fact, they're impressed that things aren't any worse. And Bank of Queensland's share price jumped 4% yesterday.
And one last quick one for you, Sean. Car Sales, the online classifieds business, said it was experiencing solid growth and expected the next 6 months to be better than the current half. Its share price fell 2% yesterday, but it is up more than 30% over the past year, so not going too badly. What's the key overseas news this morning?
China intends to stimulate economic growth and has increased the amount of cash available to lend. Banks will have to hold less money in reserve, opening up lending opportunities. Beijing has also flagged an easing of some property restrictions, which has calmed investors somewhat about the property debt crisis in the country, particularly around the Evergrande Group. The Globe and Australia needs China to expand, so that's good news. The United States and Britain have discussed instituting sanctions against Russia if it invades the Ukraine. President Joe Biden is expected to call Russian President Vladimir Putin early this morning, Australian time. Sanctions could include financial and economic restrictions. Recent satellite images have shown a build-up of Russian troops on the border with the Ukraine, triggering all the concerns. And finally, an Australian computer scientist who claims he invented Bitcoin will have to pay $100 million in damages over claims that he cheated a deceased friend over intellectual property for the cryptocurrency. According to Bloomberg, jurors in Miami federal court rejected most claims against Craig Wright. Mr. Wright claims he's the mythical creator of the peer-to-peer currency, Satoshi Nakamoto. The brother of a computer security expert had made a claim worth around $70 billion against Mr. Wright, alleging he stole intellectual property in developing Bitcoin. If the jurors had found against him, he would have had to unveil the Satoshi fortune of 1.1 million Bitcoins. That, of course, is assuming he is Satoshi Nakamoto. We still don't know.
That's a pretty remarkable story, that one.
It sure is.
I have a feeling you may be hearing that one come up on the Saturday show.
I wouldn't be surprised, Michael. I wouldn't be surprised.
I've reserved it. Now, up next, Sean, is the Daily Interview, and today you're speaking to Gareth Aird from the Commonwealth Bank.
Yes, we talked about the Reserve Bank board meeting yesterday, what's going to happen to interest rates, what he thinks about the housing market. Always very interesting and very easy to understand, Gareth. He has a real gift in terms of communication and the economy.
Yeah, he certainly does. It's a really interesting chat, that one. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 8th of December, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.